charitable gifts. I'll jump into this one. So this is I'm sure probably have heard of this as giving to donor advised funds or foundations or causes you care about, like the Boys and Girls Club. This is something that is primarily altruistic in nature, but we do sometimes see people who think by giving their appreciated asset to their donor advised fund or a foundation that they can actually selfishly come out ahead. And Peter, maybe let's walk through. It's like, how does the math work of, let's say someone here has NVIDIA stock and it's worth $1 million to make numbers round. How would that math work out between their options of if they just sell it and pay their taxes versus they give it to their donor advised fund?
Yeah. So if they sell it and pay their taxes,
let's assume they're in California.
Yeah, it's a federal capital gains bracket. And so they'd probably be taxed at around 36%, depending on exactly where they are. California taxes probably around 36%. And so that would be, $360,000 of capital gains tax, which would leave $640,000 left over after tax. But if instead they donated that $1 million to charity, they would get a tax deduction, which could offset ordinary income, not just capital gains. And so they might be, for ordinary income purposes, between state and federal, they might be in 47% bracket or something like that in California. And so they could essentially, they get a deduction that would offset about 47 cents for every dollar. So you gift $1 million and you essentially get a tax break that could be worth as much as $470,000 in this example.
Let's just round it and call it 500,000.
Yeah. Let's say $500,000. So you're still out $500,000. Whereas if you
just to reiterate, because just to reiterate this, because sometimes people do make a mistake on this. You have $1 million stock. If you give that away to charity, at best you're saving $500,000 in taxes. So on one side, you gave away $1 million, and you're saving $500,000 in taxes. You are definitely down personally $500,000. Now that may not be a bad thing because you want to give to charity, but if you're solving for your own kind of financial needs, you're definitely not coming out ahead. Is that right, Peter? You have to be altruistic for that to make sense and believing in what you're giving away the assets to.
Yeah. Yeah, so it depends on the structure.
Run through this
some structures we'll talk about, you actually can come out ahead potentially.
Yeah.
But the typical charitable gift where you're just giving money to a donor advised fund or a charity, you're not actually coming out ahead personally. Between the benefits that you get, the tax deduction and the benefit that the charity gets, it could easily be worthwhile. But it doesn't make sense if you're not valuing the charity's benefits.
Yeah, exactly. And this is where we have a couple of opportunities here of, now, one key thing is generally when you give to these charitable entities, you do receive an upfront tax deduction, even if the money's not given to charity this year, next year, or even let's say for your lifetime, you're getting a charitable tax deduction today. It is better to gift, if you are altruistically trying to do this, or even non-altruistic trying to do this, you'd rather gift the appreciated asset before you sell it to charity versus selling the asset, having to pay the taxes, and then gifting money after you pay taxes. Now, we would segment these into some of the common charitable entities that people give away to assets to are DAFs, which are donor advised funds, foundations. If you give money to those are really altruistic in nature, where the personal benefit is much smaller than what you're giving away. So you have to believe in the cause that you're giving away to. There's also vehicles called charitable remainder trusts and charitable lead annuity trusts, respectively known as CRUTS and CLATS, which can also be personally beneficial and have a charitable interest involved. One other piece to call out is if you gift the asset in the transfer has to be completed by December 31st to get the charitable deduction this year.
Yeah, donor advised funds, CRUTS, and CLATS can all be set up before the end of this year. A private foundation can't be, just because, it would be very hard to set it up before the end of the year at this point because it's already December. If you haven't started setting up a private foundation this year, you're not going to have it set up by December 31st. But the other three you actually can set up before the end of the year if you wanted to.
That's a great point.